My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain, but to educate, teach. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Here's what the bulls want to happen in this environment. We want weakness throughout the economy, except when it comes to our companies. We want rate cuts, even if inflation is only somewhat under control. We want our companies to be less cyclical, less beholden to interest rates. We want their demand to be so great that they don't have to worry about the yield on the 2-year, the 5-year, whatever. And I got to tell you something, it's all very confusing. On a roller coaster day where the Dow ultimately lost 115 points, S&P inched up 0.11%, and the Nasdaq gained 0.56%. In other words, you know what we want? We want Dr. Pangloss. All is for the best in the best of all possible worlds. But there's no such thing as Pangloss reality. Even in Candide, he's a joke. You can't have a weaker economy with lots of companies making fortunes. It doesn't happen. Other than utilities and some drug companies, there are very few companies that can make their numbers unless things speed up. We know they need a faster economy because we got a manufacturing ISM report today that was eye-popping. It showed that, and I'm going to quote here, economic activity in the manufacturing sector contracted in May for the second consecutive month, but the 18th time in the last 19 months, end quote. Come on, man. It goes on, quote, the new orders index remains in contraction territory, registering 45.4%, 3.7 percentage points lower than the 49.1% record in April. That was, I think, a little frightening. And it goes on to say, quote, demand remains elusive as companies demonstrate an unwillingness to invest due to current monetary policies and other conditions, end quote. That is pretty disconcerting. Now, I am not so sure that everything's weaker out there. We know that Dell was down a lot last week over concerns that maybe the business world is not strong enough to justify building out all these data centers. And they are Dell's bread and butter. Anything negative for Dell makes us think twice about the AI-fueled data center build-out that's inspired so much stock buying, which until last Thursday, everybody assumed was the biggest demand generator out there. More on that later. For now, you just need to understand how Dell's decline could lead people to a very negative conclusion about one of the fastest growing parts of the economy, the data center. You know what? I think they are absolutely wrong to reach that conclusion. But what do I matter? We see oil in total collapse, right? Now, again, there are major mitigating factors, including a roadmap for how big producers can eventually bring more oil to market. But just as Dell's weakness could possibly mean weakness in the data center, investors are convinced that the lower oil means pending recession because we're just at the start of summer driving season. They don't think that lower oil could lend to rate cuts themselves. I think that's a big mistake. As for me, like with Dell, I want to buy the oil zone weakness. I don't care about technical breakdown. I think the economy is weak enough to crimp demand for gasoline. I like Coterra, which has equal amounts of oil and natural gas. Oil is less cyclical than it used to be, but it's totally hostage to the decision of nation states. And it's only in the 70s because the war premium from Ukraine and the Middle East. Retail's got the same darn feel. The haves like Costco, Walmart, Burlington Stores, TJX are all about saving money for you, the consumer. People see them as exceptions that prove the rule, with the rule being that retail's in slowdown mode. But, man, when you look at, how about the Gap, Best Buy, Dick's Sporting Goods, Williams-Sonoma, Ralph Lauren, these are retailers that are doing fabulously. The action retail's more hit or miss than signaling a recession around the corner. You just have to be a little more discerning. Today, a longtime bear from Citi, who started covering Best Buy on March 8th of 2021 with a sell, actually double upgraded the stock because it might be the biggest beneficiary from all the new AI-powered PCs. As Investing Club members know, I agree. BBY is a terrific name. Or how about the machinery plays? They may be throwing you off the scent, too. We're beginning to see cracks in companies that buy equipment because they don't need it now that there's a lack of new home building. Devastating for the likes of Caterpillar, Vulcan Materials, isn't it? I say it's devastating for their stocks, not their businesses, which are doing just fine and are far bigger than housing. Transportation, okay, what the heck did happen with FedEx? It's getting crushed. Union Pacific, oh my, can you believe that? Old Dominion Freight, J.B. Hunt, all signaling that things are getting very tough out there. But these stocks are highly emotional stocks. entities that respond to a host of different inputs. So do the airlines, which aren't truly getting hit. Only American is weak because they had a strategy that wasn't working. Finally, there is one real black hole out there that is unequivocal, and it's a place we've never had it be a black hole, and it's called enterprise software. We know these stocks are weaker, but as I wrote to members of the Investing Club this weekend, I wish you guys were members, because this one ruined my weekend, but I thought it would be good for you guys. I ruined my weekend with my wife. It's okay. It's good for you. Didn't come out right. It's just good for you. Every business is wondering how many people will have to lay off because of AI. So why on earth would they sign up for cloud software subscriptions for more users? They need to figure out what their workforce will look like before they make these kinds of decisions. So I actually think that there's a recession developing in enterprise software. That is happening. But so far, it hasn't spread to enough companies to truly impact the tape. That's the only area I know that is in real trouble. Against all this, you might have watched the keynote of NVIDIA's Jensen Huang at the Computex conference in Taiwan this week. You got to watch. It's really great. Jensen believes that if you buy one of his Blackwell chips, it will make you more money than it costs. As he put it this weekend, the more you buy, the more you save. He goes on to emphasize that NVIDIA is so far ahead that I actually started thinking, like, geez, maybe they're the only real winner in generative AI. There are so many partners who regard themselves as winners because they're in the same room as Jensen that it seemed like a real comeuppance. Again, I think that's a mistake, though. There's a great secular case to be made for accelerated computing and generative AI. The idea that there can only be one winner, NVIDIA, and NVIDIA alone, is just inconceivable to me. The whole point of NVIDIA is that it's enabling winners everywhere. But Wall Street's too hung up on Dell's meltdown to believe it. That's wrong. NVIDIA raises everybody's game. And, of course, there are the tremendous drug stocks. AstraZeneca and Johnson & Johnson announced some breakthroughs in fights against cancer this weekend, specifically for heretofore intractable situations. AstraZeneca seems like a steal to me. J&J, beset with litigation risk, I don't care for it. Oh, and don't forget Eli Lilly, which has so much going for it that it can transcend the rest of the economy, even more than your typical drug stock. But let me give you my brief. When you read the statement from the manufacturing PMI, it is weak, weaker than feared. That will cause inflation to cool. Fewer price increases, more price cuts. Housing goes down in price as young people move back with their parents. The old car will do just fine. You'll change your auto insurance to where your collision doesn't kick in when you have a small accident. And that's ultimately what could sway the Fed, particularly if we get any sort of job weakness on Friday's numbers. So the bottom line, you may think that these negatives are happening right now. Many of them happened already, though, and they've been baked into the relevant stocks for months. Your best bet is to accept the degradation and just wait. There are now brown shoots everywhere. And frankly, I think it's exactly what the bulls needed. As long as J-Powell sees the weakness and knows that it can still be corrected. Bob in Illinois. Bob.
Hey, Jim, how are you doing?
I am doing well, Bob. How about you?
Well, I'll tell me in a minute. I've enjoyed a nice run on Kava.
Oh,
and,
yeah.
The last couple of days, it's declined, particularly today. And I got stopped out about 93, and it's off about 5 points today. I'm wondering if a good point to get back in, which I plan on doing, or shall I wait it out, or is that a good place to get in, or what's a good entry point?
Okay, well, let me tell you, I have some rules in these that might help us. For Kava, okay, the stock's high was 96. It's down to 88. I would think on a red-hot stock like this, as we saw with ARM, you've got to wait until you get maybe a 15 to 20% decline. We're not there yet. But when we get that, I would indeed pull the trigger. Zach in Pennsylvania. Zach.
Hey, Jim, big booyah from Eagles Nation. How are you?
Man, Eagles Nation. Saquon, I think Saquon's playing. He's still playing for the Giants. He's like the best running back in the league. If we could get him, everything could change. How can I help?
I hope to see you in an Eagles game this year.
Oh, yeah.
So I am in my mid-30s. I'm looking to start moving some things. I want to sell half this position, and I want to move it to possibly the S&P, but my stock is Carrier Global.
Oh, man, don't sell Carrier. Jeez, David Gitlin is doing such a great job. I think you leave before he's got work to do. He wants to get that stock much higher, and he will succeed. Do not sell Carrier. Go Birds. All right, there are now brown shoots everywhere, and I think it's exactly what the bulls need. As long as J-Powell sees the weakness that we do and knows it can still be corrected. Now, tonight, I'm going to be reading the S&P 500 names that came out on the top and bottom of the pack this May. Then, what's behind Dell's 20+% decline since last Thursday's report? I'm breaking down the quarter to see if investors are getting a buying opportunity. And during this turbulent time for the restaurant industry, I'm sitting down with former Yum Brands CEO David Novak on the eve of his leadership book release to get his take on a host of market-moving news. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.